A seismic event has just rocked American economic policy, sending tremors through global markets and rewriting investment rules. Known as the Big Beautiful Bill, H.R. 9373, this legislation marks a dramatic shift in U.S. priorities, championed by Trump's allies to reshape industry, social spending, and foreign capital's role in America. Its passage was a brutal political brawl, leaving the nation deeply divided. Wall Street reacted instantly. Tech and green energy stocks plummeted, while traditional industries surged. The bill bets on manufacturing over tech, military strength over social safety nets, and economic sovereignty over global integration. It introduces new tax rules, cancels energy subsidies, imposes a tax on foreign investors, and reallocates federal funds. Raising the debt ceiling by $4 trillion while deterring foreign investment creates a precarious dynamic for the dollar and U.S. bonds. As the president prepares to sign this historic bill, the world holds its breath for a new American economic order. The passage of H.R. 9373 was a masterclass in political brinkmanship, pushed through Congress by the slimmest of margins. In the Senate, it passed 51-49. In the House, just 215-214. A single defection would have killed it. The bill became a proxy battle between visions, a globalized, tech-driven future versus a return to industrial and military might. Trump's influence was unmistakable, with his allies framing the bill as the fulfillment of America First promises. Lawmakers faced a loyalty test, torn between party allegiance and opposition from tech and renewable energy sectors. The bill's passage required forced compromise, resulting in a patchwork of conflicting interests. It stimulates consumption with tax cuts, but slashes social programs, and champions industry while complicating global supply chains. The razor-thin margin ensures the debate is far from over. It now moves to the global economy. At the heart of the Big Beautiful Bill are the three blades of reform, tax changes that reshape the economy. The first blade slashes taxes for small businesses and manufacturing, pivoting away from tech to revive American industry. The second blade targets consumers, offering tax relief to low- and middle-income earners to boost spending. This provision was key to securing votes, even as social services faced deep cuts. The third blade cancels all new energy tax credits, especially for electric vehicles, reversing decades of green policy. This move prioritizes fossil fuels and traditional automakers, drawing ire from the tech sector. Together, these blades redraw the map of winners and losers, forcing every investor to reassess their strategy. The bill's most dramatic move is ending federal support for the new energy sector: solar, wind, and electric vehicles. These industries, long fueled by tax credits and grants, now face a harsh new reality. Tesla's stock plunged 7% on the news, with Elon Musk publicly condemning the bill as an attack on sustainable energy. The loss of EV tax credits threatens adoption rates and puts U.S. manufacturers at a disadvantage globally. The entire green tech ecosystem is scrambling, with projects shelved and venture capital retreating. Traditional energy and legacy automakers stand to benefit as the playing field tilts in their favor. The bill bets that private markets can solve energy challenges, a gamble many experts doubt. For investors, the message is clear: green energy's tailwinds have become headwinds. Hidden in H.R. 9373 is Section 899, a new admission tax on all foreign capital invested in U.S. markets. For the first time, foreign investors must pay a special tax just to buy U.S. stocks and bonds, ending America's tradition of open markets. Supporters call it economic nationalism. Critics warn it could deter the capital inflows needed to finance U.S. debt. Already, sovereign wealth funds are quietly reducing U.S. holdings, and ETF inflows have slowed. The fear isn't just the tax, but what it signals: a possible move toward more aggressive capital controls. This could raise borrowing costs, weaken the dollar, and erode its reserve currency status. Section 899 is a high-stakes gamble. Betting America's allure outweighs the new barriers, but it risks poisoning the well of global capital that has long fueled U.S. growth. The Big Beautiful Bill redefines U.S. spending, shifting billions from social programs to defense and border security. $110 billion is cut from Medicaid, education, and food assistance, while $144 billion is added to military and homeland security budgets. Funds go to next-gen fighter jets, drones, cyber warfare, and border fortification. The result? A net increase in the deficit, even with deep social cuts. Proponents argue this prioritizes national strength, Critics call it a moral and economic catastrophe. The bill redraws the social contract, favoring hard power over human capital. Tax relief for low-income families is offset by cuts to essential services. This reallocation will have lasting effects on American society. The Big Beautiful Bill creates clear winners and losers on Wall Street. Defense contractors, cybersecurity firms, and traditional manufacturers are poised for growth, buoyed by new government spending and tax cuts. Infrastructure companies, especially those tied to border projects, also benefit. Investors are rotating out of tech and green energy into these value-oriented sectors. The losers, new energy firms, education, and healthcare companies reliant on federal funding and stocks with high foreign ownership. The admission tax makes U.S. assets less attractive to global investors, pressuring international favorites. The investment map is redrawn. Domestic, industrial, and security-focused firms rise, while tech and globally integrated companies fall. Every investor must rethink their portfolio for this new hierarchy. The bill raises the U.S. debt ceiling by $4 trillion, signaling the end of fiscal restraint. This expansion will be financed by massive borrowing, impacting U.S. treasuries and the dollar's stability. More bonds mean higher yields and borrowing costs, especially as foreign buyers retreat. The risk of feedback loop of rising rates and a weakening dollar, challenging America's creditworthiness. In this environment, gold's appeal as a safe haven grows, serving as insurance against fiscal irresponsibility. The bill may not spark an immediate gold surge, but it strengthens the case for steady gains. The question: can the U.S. manage this debt without undermining its currency and credit? The Big Beautiful Bill has upended the investment landscape, demanding a new approach from investors. Start by reviewing your portfolio's sector exposure, especially to new energy, education, and healthcare. Don't panic sell, but rebalance towards sectors favored by the bill: manufacturing, defense, and traditional industries. Assess holdings with high foreign ownership, as the admission tax may create headwinds. Rising debt and a weaker dollar make hedging, like gold or commodities, more important. Investors must now become students of policy, tracking the bill's implementation and global capital flows. The window before the bill is signed is crucial for final adjustments. In this new era, being policy-aware is essential for investment success. The Big Beautiful Bill marks the end of an era, ushering in economic nationalism and capital controls. America, once the champion of open markets, now builds new financial walls. The bill channels resources to the military-industrial complex and traditional manufacturing, pulling back from social welfare and green energy. This recoding of priorities will deepen divides between favored and neglected sectors. For global investors, Section 899's admission tax signals that U.S. markets are no longer a safe, predictable haven. The world may diversify away from the dollar, accelerating a shift to a multipolar financial system. Success now requires understanding the intersection of politics and finance and agility to respond to policy-driven market shifts. The future of American capital is more protected, more strategic, and more contentious. The world of money will never be the same.